Okay, so let's continue. So, professors, let's now look at our expenses, right? Expenses. And I think as for the expenses, you know them, a lot of them, right? But the hint is that they are on the debit side. So let's go through and see our expenses. I think I'll do this one together with you. The first item, plant and machinery, is a fixed asset. It's not an expense in the trading account or in the profit and loss account. Opening stock, it's dealt with in the trading account. Purchases done. Building, fixed asset. Carriage in was used in the trading account. Carriage out was, that'll be our first expense. Carriage out was. It is 5,000 Ghana cedis. The next is wages. It has been used. Trading expense is gone. Sundry debtors is a current asset. Salaries is another expense. Salaries. Okay, this is pure administrative expense. Furniture is a fixed asset. Trade expense, it has been used in the trading account. Discount on sales, and like we looked at the beginning, that's discount allowed. So discount on sales is an expense, 1,900. The next is advertisement. Advertisement, which is also an expense. It's a selling and distribution expense, right? Because if you want to sell, you have to do advert. 5,000. The next one is bad debts. Bad debts. Bad debts. Bad debts is 1,800. Then we have drawings is, the owner's, withdrawal. It's not an expense here. It will affect capital in the balance sheet. Then we have insurance. Insurance, 4,400. Then the bank balance is an asset. Bank balance is a current asset, right? So, professor, these are the expenses that you have for this question, right? And you just sum them together and get the total expense. And you compare it with your total income. So total expenses. So those who have the calculator, how much are we getting for total expenses?
Please, we are getting 264,500.
Of Portia, what type of calculator are you using? Look at the expenses. So
no, sir. We are getting 42,100.
42,100.
Please listen. Sorry, 100.
Okay. So please, can others confirm the figure? Is it 42,100? Okay, let me use my phone.
Please.
Okay, great. Let me also confirm with my Excel formula. Yes, 42,100. So Portia is right. So when we less the total expense from the total income, are we getting a net profit or a net loss? I think it's a net profit, right?
Net profit, sir.
Yeah, because the income is more than the expenses.
Yes.
So that one will be how much? Yes, 264,500.
Say pretty that.
Yes, 264,500, and that is our net profit. So, professors, this is how you prepare your profit and loss account, right? So this was for the assignment. I don't know how many of you scored all points. Some of you will get 8 over 10, others will get, but I'm sure none of you get 0. If you get 0, I'll come to your home and I'll eat your food as punishment. Okay, so that is it for you. Now, if the question Yeah, Josephine, you have a question. Go ahead.
Please, why is it that the trade expense didn't come rather under the less operating expenses?
Yes, because it is a trading expense. You see, okay, let me allow other professors to explain. So, Portia, why did we not bring the trade expense under the operating expense?
Sir, because is a particular under the trading account is not part of the profit and loss, say. Sir, please, am I right?
Yeah, so Prof. Josephine, it's a trade expense, right? So it affects the trading. So if you want to know how much profit or loss you are making from your trading, then you have to consider that. Okay. So it's not an operating expense, it's not a general expense. Okay. Now let me make this distinction so that maybe you appreciate. Some of the expenses are in the profit and loss account simply because you cannot trace them directly to the trading activity, or it's more or less like an indirect expense, menkanasa. Okay, those that we take to the trading account are the direct expenses affecting the trading. Okay. So if you check here, this is an expense, but it's a trading expense. Carriage invoice is an expense, but it is a trading expense. Why? Because until you incur those expenses, you can't get the goods to sell them. Okay. So that's the rationale. But for things like this, I think I spoke about the carriage outwards. Salaries, for instance, whether you sell goods or not, in as much as you have workers, you have to pay them salary. So you cannot directly trace salaries to your trading activity. Okay. That is why we look at separating this. Advertisement. The fact that you advertise, you see, how do I make this sound well in your ears? You see, sometimes you don't even advertise, yet still people come and buy your goods. Okay, so advertisement is not like a direct by force expense related to trading. So those expenses that are not by force or are seen to be general, okay, we don't put them in the trading account. We put them in the profit and loss account. Okay, so that is the simple explanation I can give. I hope you are okay, Prof. Josephine.
Yes, please.
Thank you too. Okay. Now I wanted to draw your attention that if the question had combined the two accounts, so the question would say prepare the trading and profit or loss account. Professors, it would have been the same thing, just that your heading would have been trading and profit or loss account for the year ended 31st December 2005. And then right after getting your gross profit, you would have continued to add the other income like this. So let me show you, let me demonstrate that to you. So you see, right after getting the gross profit, you would have continued to add other income. Okay, that's the only difference when they ask you to combine. But if they ask you to separate it, then make sure you do only the trading and then you come and do only the profit and loss account like we did in our case. So I hope that is fine. Okay, so professors, that is the trading and profit and loss account. Let's look at the balance sheet. Then we'll begin to move ahead with the adjustment. Okay, and that is where professors sometimes find problems with the adjustment. But trust me, it's going to be very easy. Having said that, I think I have a list of expenses, okay, that I can introduce you to. So we have rent and rate, insurance, salaries, motor expense, discount allowed, carriage outdoors, bad debt, advertising, lighting and heating, interest on loan, repairs, maintenance, commission paid, delivery expense, bank charges, office expense, administrative expense, electricity, telephone expense, postage, printing and stationery, miscellaneous, selling and distribution, depreciation of asset. Professors, how did I get this list of assets? I went through the textbooks and picked all the possible expenses that may come your way. So please familiarize yourself with this so that you don't have issues with it, okay? Okay, so I believe you know these things, you know them. So let me not even stress myself. And for the other income, I think we have stressed on that. Discount received, investment income or interest on investment, commission received, rent received, and of course, dividend received. What is dividend? What is dividend? My professor, you should know this. What is dividend? Dividend. Yes, who is, oh, Portia, no. This one, I beg you. Dividend. Okay, Portia, you tell us.
Sir, please, in a company, maybe the shareholders, what they receive at the end of the year is called a dividend, sir.
Okay. So dividend is also like an investment income or interest on investment, but the specific investment is shares. So when you invest in shares of a company, you receive that dividend, right? Okay. Thank you very much, profs. So that is it. Now let's look at the balance sheet. Professors, the balance sheet may look like it is difficult, but it is not difficult. I will start by using the accounting equation. And professors, I believe you all remember the accounting equation. Assets equals capital plus liabilities. I believe we all remember this, right? Now let's do some divisions. We know the fixed assets, the asset is made up of fixed assets plus current assets, right? And then capital is capital. But you know capital is affected by drawings and what? Profit. Okay. And the liabilities are also current liabilities plus long-term liabilities. Now, if we explore, we can explore more about this formula, okay? But the balance sheet is a representation of your accounting equation. So let's do some small gymnastics. Now, the balance sheet can be presented in different models or methods. But for your level, it is recommended that you look at what we call the net asset method. Professors, the net asset. I think I have not done this in classes. So please, can we all unmute and say net asset method?
You can say what?
Net asset method.
Net
method.
It sounds very funny when all of you are speaking at the same time. Anyway, that was just by the way. So the net asset method. Now for this method, this is how you go about it. You first put your fixed asset first. You first bring your fixed asset. Then you go and look for what we call working capital. And how many of you remember working capital? Because you have been introduced to this balance sheet I think in your first or second semester, Form 1. What is working capital? Oh, okay. So working capital is equal to your current assets minus your current liabilities. This is also another highly examinable objective test question. Or even in theory, it can come. Briefly explain working capital. It's your total current asset minus your current liabilities. So in your balance sheet, you first put your fixed asset, then you go and look for this working capital and come and add it to the fixed asset. And that will give you your net total assets. And that is one section of the balance sheet. After that, so if you appreciate the formula I expanded here, okay, this fixed asset as current asset will transfer the current liabilities to come and subtract for it. So our balance sheet will be fixed asset plus current asset minus current liability, and it should be equal to your capital plus long-term liability if you are following the formula I expanded. Okay, because then you'd only transfer the current liabilities to the other side of the equation, and it will be left with capital and long-term liabilities. So the capital and long-term liabilities forms the second section of the balance sheet. Why do we do that? We do that because in reality, if you are financing a business or if you are running a business, your main source of capital or money comes from the owner and long-term borrowing, okay, or long-term liabilities. The current liabilities cannot be used to finance a business simply because you have to pay them or settle them within a short time. But the long-term liability has longer lifespan for you, so you can use that to finance your business. That is why you can go for a bank loan to run a business, because they will give you enough time to pay. Okay. So the rationale of the balance sheet is for us to know indeed the total funds we are using to finance or run the business and where they are coming from. And mainly they come from the capital and the long-term liabilities. But as I indicated to you, your capital would always be affected by your drawings and your net profit. Okay, so normally we bring in the capital, add the profit, because if you get profit, you add it to your capital. If the owner has made any withdrawals or drawings, we less it, and whatever we get, we add the long-term liability. So that is the second section of the balance sheet, the finance by. So in brief, this is like the skeleton of your balance sheet. The first section is your net total asset, which is determined by adding your fixed asset to your working capital. And I've explained working capital to be current assets minus current liabilities. Okay, so just on the left side, you can see this is the detailed structure of the balance sheet. You put the heading balance sheet asset, 31st December, whatever it is, the year you have. And look at it. Your first thing you bring is your fixed asset. Okay, your fixed asset. And I believe you all appreciate that we have the tangibles and the intangibles. So these are the tangibles: land and building, fixtures and fittings, motor vehicle, plant and machine, all those assets. Then the intangibles: goodwill, copyright, investment, right? But look at something here. Our fixed asset, if you have a building, if you have a vehicle, if you have whatever, they depreciate. And what does it mean? Depreciation means their value would fall or reduce. If you buy a car today, because you'll be using it 2 years' time, the value will fall. Once a baby rusty, if it's a building, you see cracks, the paint will be wearing off. That's depreciation. So in accounting, we value that depreciation and we less it from the cost of the asset. So always when you present your fixed asset, you show the cost, as in how much you acquired it. You less any depreciation, and please, this depreciation will be given, so it's not anything that you have to worry your head about. Now, when you less the depreciation from the cost, you get something we call net book value, and you can abbreviate it as NBV, net book value. So that's the work you do around the fixed assets. So after you have gotten your total fixed asset, you remember what I said, you go and look for your working capital, which is your current assets. So you list your current assets, then you less your current liabilities from it to get the working capital. So the working capital now adds on to the total fixed asset, and you get the net total assets. After you have gotten that value, you move on to finance by, and that is you begin with the capital. You know, during the course of business, some owners can add on more capital, and that's additional capital. So if the question has anything like that, you add it. Then you add your net profit as well. If it is a loss, you subtract, right? Then you less drawings. We are lessing drawings because you all know if the owner has taken something for personal use, we less it from the capital. When you do that, you get the net capital. Then you add the long-term liability. Professors, the long-term liability of any sole trader is a bank loan. But we have other long-term liabilities like bonds, government bonds, or let me say bonds, and then debenture, or what somebody said, debenture. So bonds and debenture are other forms, but they appear in, I think, companies. For companies, you can see these long-term liabilities, but for a sole trader, it is your bank loan. Okay, so this is your balance sheet. Professors, I beg you, I'm going to put this format on your page. Sit down, go through it, prepare it 1, prepare it 2, 3, 4, 5, and let it manenka wonsano. And I think you should pay attention to what constitutes your current assets and what constitutes your current liabilities. Okay, so for your current asset, you have your stock, which is also known as inventory, your debtors, prepaid expenses, accrued income, bank, and cash. So I think I'll pause here. If there are questions, let me have them. If there are no questions, I'll leave you to go and also search for some of the items in the balance sheet, what they mean, and also grasp the format into your beautiful brain. So any questions, professors? No question. Okay, Josephine.
Yeah, please. So is this a balance sheet for the sole trader?
Yes, it is. In fact, companies have the same format. Even partnership have the same format, just that maybe some of the items may change their name. So for companies, you might not see something like capital. You see something like shares, be it ordinary shares or preference shares. Okay, and instead of net profit, you see something like retained earnings. So it's the same format, just that some of the words will change because you are dealing with a different company or a different business, I should say.
Yeah, please. So do they have like a general balance sheet?
Yes, so Mr. Amwa is recommending to you that study this format of a balance sheet, which I've said the name is a net asset model. This is the net asset model, right? Other models are there, but this is the one that is prescribed, okay? And it is the same for sole trader, sole proprietor, partnership, company is the same. Even non-trading organizations like churches, whatever, is the same. But just that some of the terms will change their name. If you look at non-trading organizations, when I say non-trading organizations, I'm looking at those organizations who do not engage in business to make profit, but they are looking at performance services to benefit people like churches, okay, like clubs and societies. They also have balance sheets. The items are the same, just that the names will change. For clubs and societies and churches and non-trading organizations, they call their capital accumulated fund. So on their balance sheet, you not see capital, but you see accumulated fund. And I hinted you for companies, okay, you will not see capital, but you see ordinary shares and preference shares. That's the name of their capital. So the format is the same, okay? They all start with their fixed asset, go and look for their working capital, but just that the words may change. And it doesn't even change much, just a few words that change. Any other questions? Okay, no questions. So I think I'll save you stress this weekend. You wouldn't have any accounting assignment, but you'll have to sit down and study the balance sheet format, because when next we meet, we'll go back to these questions that we have solved, okay, and prepare the balance sheets, okay, for the questions that we have solved. We prepare the trading, the profit and loss. The next is to prepare the balance sheet. So we'll look at that. Or I should give you one question to try over the weekend as assignment. Yeah. Let's do a vote. Should I send this question to you, the one on the screen, to prepare just the trading and profit and loss account? Those in favor say aye. Those not in favor say bye-bye. Should I put it? Yes. Okay. Bright is waving bye-bye. Bright, you are not a better student. Okay, so professors, I think if there are no questions, I'll leave it here. I'll send the balance sheet format to you to study. Okay. The only way you can remember is when you write, you close your eyes, or you cover the book, you rewrite it. When you make mistake, you go and check, and then you come back again in that order until you can remember it fully. And those who have not done the trading and profit and loss account, please do same. Watch the videos. I beg you, watch the videos and catch up with us. Thank you very much. So professors, I think I'll end the class here and wish you all the best and a good weekend. I'll possibly be chatting you on the page. And I think, no, that was on the BM page. Please, if you have any question or if you are confused about something, maybe you watch the video and you saw something you are confused, you can do an audio recording and put it on the page. Or if you are shy, you put it in my direct message. I'll pick it and then I'll answer you. I think Austin, you did one with Austin is not here. Yeah. Austin sent one on some debit note, credit note issue he was confused about, and at least, so feel free to ask me questions. I'm not only here to be live with you in class, but if you reach out to me, I'll answer you, okay? So have a nice day. Bridget, Bright, Fifi, Eshen, Josephine, Michael, Nadom, Portia, and Augustine. God bless you and give you more life, more money. Let you stay positive and avoid all negativity and Bye-bye.
Amen. Bye.
Bye, sir.
Finally, Bridget was talking. Bridget, Bridget, you are doing hide and seek with me. Because I heard somebody's voice sound, okay, Bridget's sounding voice like, I don't even know what I'm saying. Bye-bye, professors.